I welcome you all to today's seminar on career prospects in the financial sector with some special reference to Indian financial markets. First of all, I welcome the dignitaries on the dais, our esteemed advisor, Sir Dr. Kanucharan Swain, respected Principal Sir Dr. Sanjeev Kumar Das, and we are extremely delighted to have with us Dr. Satyaswarup Devasis Sir, Head of Department Business Administration, Utkal University. Now, I would like to request our respected advisor, sir, to felicitate our guests with bouquets, please. I request our dear student to assist advisor, sir, in this. Thank you, everyone. Dr. Satyaswarup Devasis, with a throughout higher first-class career, he is having 25 years of experience in teaching and research with universities such as Nirma University, Ahmedabad, GGS Indraprastha University, Delhi, KIT University, Bhubaneswar, and Fakir Mohan University, Baleshwar, Odisha. He was selected and visited South America, Brazil, in group study exchange program fully sponsored by Rotary International. Presently, he is the Chairman Board of Studies and Chairman Department Research Committee in Utkal University. He has previously served as the coordinator of Executive MBA Program, Special Officer, National Academic Depository, Director of Sports Council and Center Coordinator of Global Center for Rural Studies, a Center of Excellence under RUSA 2.0 in Utkal University. Professor Devasis is currently the Director Professor in charge of Utkal Innovation and Incubation Center. Further, he has authored over 35 research papers published in Scopus indexed journals and UGC CARE listed journals. He has completed one UGC sponsored research project in the area of financial services and mutual funds. He has authored and co-authored 9 textbooks which are published by reputed publishers like Prentice Hall of India, Himalaya Publishers and Excel Books. He has over 30 paper presentations in seminars, conferences, and chaired many technical sessions in conferences. He is the syndicate nominee to Board of Studies in Maharaja Sayaji Rao University, Baroda, and VC nominee for Board of Studies to many institutions under Utkal University. Dr. Devasis is the member of Affiliation Committee, member of Research Committee, and member of Board of Studies for Biju Patnaik Technical University, Odisha. Further, he has conducted PhD Viva at over 40 universities across India as examiner, adjudicator, and also selection committee subject expert in faculty selection at various institutes, university of repute, both in Odisha and outside the state. He has already successfully guided 16 PhD scholars and 5 scholars under guidance at present. Professor Devasis has successfully completed Nurturing Future Leadership Program under Ministry of Education, Government of India, conducted by Indian Institute of Management, Kolkata. His dynamic approach and deep insights and knowledge make him a valuable contributor to today's seminar. It is our honor to have you with us, sir. To begin with the seminar, students, having such an eminent personality among us, like Dr. Devasis, it's your responsibility to take the most out of this session because this is going to be filled with more information and experiences which will definitely be useful in your future endeavors. Sir, now I would like to request you to continue with the seminar, please. Thank you.
Very good morning to one and all. Esteemed advisor, Dr. Swain, esteemed Principal, Dr. Das, esteemed Head of the Department, Dr. Mahabharata, all the respected faculty members of the Institute, and dear students, it's a privilege to be interacting with all of you. I just got a call a few days ago from Dr. Das that we are organizing a special talk or a seminar on finance, and would you be interested to deliver a talk? I am very enthusiastic to interact with the next generation because we feel our time is almost getting over. It is your time, youth next. So whatever I know in my last 25 years of academic pursuit, I would like to share my thoughts. Do not presume that I know more than you because you are the generation next, you are much updated. But whatever experience I have gathered, being at different universities, different academic bodies, interacting with different personalities, from that ocean I would like to share few thoughts on that. Now the topic given to me is career prospects in financial sector, right? Let us not make it a monologue, right? Wherever you feel, please raise your hand, let us interact. Let us interact. In fact, I do not need a PPT, but I thought that will make it systematic, right? Although we can interact that way also. Before I begin, let me get an understanding of the composition of the audience. I guess all of you are the postgraduate or a mix of BD and MBA? Mix of that? Okay. Only MBAs. Okay. And that too, majority are in the first year? Okay. First year, second year, some are there? No. No. Okay. So, are you aware about the different finance elective subjects? What are there in finance? Have you been taught some papers in finance till now? Which paper that is? Corporate finance, financial management, same term, right? So, little bit you are aware what financial management is all about, what is finance. Although in the second year you come across a different elective, right? So the term is called financial sector, right? Let me give you a teaser to how this is important nowadays, right? Very recently two things happened. One thing is that Trump and tariff go hand in hand, you are all aware, right? And second thing, how the Reserve Bank of India is changing the repo rate. You are aware about it, right? Both have ramification on the economy and the financial sector. Let us dissect one by one, right? And then I'll come to the slide and all that. You are aware what is the repo rate, more or less, right? Repo rate is that rate at which Reserve Bank of India lends capital to the scheduled commercial bank. And why reducing the repo rate or increasing the repo rate has an impact on the economy? Because that makes your advances cheaper or costlier, right? So when the advances are cheaper, I mean when the interest are reduced, what happens in the economy? Many people go for loans, right? So what happens then? When you take lot of loans, lot of disposable income is in the hands of the consumer, customer or the public. What can happen if you have lot of money with you? Yes, somebody said?
You can start a business.
We can start a business, very good. We can start a business. Some can spend also. And the wise man can also invest. Look at the things. Although business is also investment. But more or less in economic terms, more the capital flow in the economy, supply. What happens? The inflation shoots up. Right? More money chasing less goods is called inflation. Now, please understand the Reserve Bank of India has two mandates. And both are opposing mandate. What is that? One thing, they have to ensure that the productivity in the economy is more. On the other hand, to balance the inflation also. Please understand, when you have lot of capital, you are putting that in the economy. Lot of business growth is there. So the economy, GDP growth, all that is there, flourishing. At the same time, inflation is also going up. So how to balance? That is the mandate of Reserve Bank of India in a simple nutshell. Because you know in finance, we keep on talking about risk and return. So you will come across very soon. Everything we do in finance, we talk in terms of cost-benefit analysis. Even if you do investment, how much of risk, how much of return? We talk in terms of investment spectrum. That equity is highly risky, but lot of returns are there. On the other end, you have treasury bills, less return, high risk. So this is one part, repo rate. Second thing is called the tariff one, Trump and tariff. What is your take on that? Is it a good sign for the economy in general? No, not a good sign. Okay. Okay. Economy is Indian economy, the world economy. World economy. Because we are moving towards a free trade culture. So any restriction in terms of tariff is a deterrent. So just understand that whenever you put a restriction, we are moving away from LPG era. Because we are all popularized with a concept called liberalization, privatization. But please understand, when there is a tussle between the China and the US, somebody who is sitting on the fence and a silent spectator with good rapport with the US economy probably will get a gain, because when the Chinese plus factor is not doing good, Indian factors are on the rise. Yesterday I think you had a news that the government of India is raising 12%. I think import duty on steel and something. And so all the steel prices, indigenous production is on the move. So what I want to try to tell you over here, the health of the economy, whatever manner, is dependent on how the financial sector performs. Apart from that, there is a saying called, if US economy sneezes, India catches cold. Whatever happens in the Western world, we have a ramification in India. So we are not protected in that way. Although, if you see 2007-8, around that time, when you had this crisis, no? What was this crisis named as? Subprime crisis. You may be aware, may not be aware. So 2007-8, we had a subprime crisis. Anyone? This word subprime? Yes, yes. No? Prime, we know. There's something called prime lending rate. We are aware. Prime lending rate, PLR rate. Okay. If you're not aware, prime lending rate in a layman language is the best rate that is provided to you depending on your credibility. Suppose you are the best borrower as a corporate, you got AAA rating. So when you go to the bank and ask for money in terms of loans and advances, then we provide you at a cheaper rate because you are a prime borrower. So in 2007-8, what happened? A lot of money was there in the US banks. They didn't know where to invest. So what happened? Slowly, the money was siphoned up to those borrowers who are not having good credit rating. So that had a mortgage crisis and all that. The economy in terms of, Lehman Brothers, how the collapse happened. What I am trying to hint is that to make a career in finance, lot of reading is required. Isn't it? Lot of reading is required. So let me go through one by one slide and we try to interact. I'm not going to restrict myself to slide. This is only there here and while to shift your attention to the slides. That's all. It is nothing else. I don't want to make it a classroom scenario, but we'll begin with that. When we talk about something called financial markets, so the basic definition is there. What is financial market? Or the marketplace for trading of securities, stocks, bond, all of that. Primarily all financial market, because that is the theme of the talk, right? You can have money market, you can have capital market, you can have primary market, you can have secondary market. Isn't it? Now suppose I say you are trading. Suppose you have opened a demat account, right? And you are trying to buy Tata Steel stocks. Which market you are functioning into? Which of this market you are functioning? Is it money market, primary market, secondary market, capital market? Capital market. Okay. Anything else?
Secondary market.
Yes, secondary market also. So you know this, right? So primary means when you come with an IPO, initial public offer, first time. And secondary market is for the existing security, is basically change of hands. Somebody is selling, somebody is buying. That is one thing. But I think when we talk about financial sector, let me break some myth for all of you. Normally we are fixated that financial sector primarily means banking and stock market. Majority of the view, wherever I have interacted, the narrow myopic view, there was an author, I'm trying to slide away from finance to marketing. There's an author by the name Theodore Levitt. Theodore Levitt is a marketing professor. 1973, he gave a concept called marketing myopia. You will maybe you know, like, anybody would like to highlight this marketing myopia? What exactly? Short-sightedness. What example could be that? Short-sightedness. Marketing myopia. How can we be myopic? Okay. You heard about this Kodak? No, Kodak camera. Where are they now? Who is using cameras? Are you using cameras? Smartphones have replaced our cameras. Although there are professionals also who are using camera. What I want to say is that unless you are able to see 30, 40, 50 years ahead, we say we are myopic in our vision in terms of whether marketing or finance. So when you say that financial market is banking and stock market, let us not be myopic. There's one more big sector called bond market. And please understand, nowadays you may be listening that FII, that is foreign institutional investors, are pulling out money from the economy and therefore the market is coming down. One of the narrative built in the news that FIs are pulling money. Did you ever question why the FIs are pulling out money? What could be the possible reason why the FIs are pulling out money from the Indian economy? Possible reason for anyone? Maybe the economy is not doing good. Okay, then maybe there is political instability in the country, anything else. Or the bond market in US is more attractive. Therefore, you are shifting capital from the equity to the bond. Now, what is the most lucrative asset over here? Gold, bullion. It is touching 1 lakh, right? There will be minor correction because when there is a lot of this buying happens, so there will be corrections. So let us move to the next one. What I want to tell you. So basically, the careers in financial sector can be broadly listed out on the following. So we know banking because many are preparing for the bank jobs, whether it's an officer's job or any other special officer's job. I'll come to that one by one. There's something called mutual funds. You're aware about it, little bit. We'll also try to spend some time because that is a sector, a lot of opportunity in terms of career is there only. Then stock analyst, equity stock analyst, registered equity stock analyst, portfolio management services. So when you become a fund manager, right, what is the best performing mutual funds now? According to you, which fund is doing good? Which fund? Which scheme of mutual funds is doing good? Whatever. Yes. SIP is a mode of investment. Which is it? ICICI Emerging Fund, something like that, or Kotak Top 100. Which scheme is doing good? Kotak Nifty. Okay. And what makes you feel that that is a best performing market? What would be the yes? Yes. Return is more. Can somebody qualify? She says return is more on a particular scheme. How do we quantify that return is more on a scheme? Do we look at NAV?
Yes, sir.
Net asset value. Did you ever question how the NAV is decided? Many things we presume, many things we believe on face value. Like majority of time, I'm not trying to undermine the importance of professor in the class. Many a time when the professor speaks in the class, we believe as a Bible, gospel, on the face value. We hardly question it. So now people are questioning how that NAV is decided. There is no transparency in that. Although if you go down, there are constituent stocks. I'll come to that slowly. Then we have something called risk management in the investment banking arena, right? So what are the top leading investment banks which you know? Morgan Stanley is one, right? So there are multiple. So we'll come to that, what is the risk management. Then insurance is a common traditional thing that we know. And the last is about financial derivatives, which is the new things. Derivatives is a new thing where this is what I'm trying to tell you over here. If you open any IIM websites, just try out after the class. Right? You will find more than 30-40 electives, subjects in finance only, which are given to the students in IIMs. So we cannot limit ourselves to only banking and stock market and mutual funds. Although since time is limited, let me limit my talk to only mutual funds, stock market, banking, whatever you know, right? Let us begin with mutual fund. The question I have posed to you. Best performing stock and then NAV, how do we know? Because why I am saying, for a retail investors, and if you want to make a career in finance, mutual fund research analyst is one of the highest paid jobs, backed with knowledge. Please understand one thing. Those who hanker behind banking, typical insurance, they are basically into financial services which has a marketing component to that. Target-based job. These are the opportunities where your knowledge, skill comes handy beyond your marketing acumen. After the session, just try out and search. There is a scheme called Parag Parikh Flexi Cap Mutual Fund. Parag Parikh Flexi Cap Mutual Fund. Okay. Now, suppose I have spelled Parag Parikh Flexi Cap. You should obviously ask what is a Flexi Cap means. If you know, very good. Flexi Cap is? Flexi Cap, what is Flexi Cap? Basically, Flexi Cap means capitalization. Cap is a short form of capitalization. Flexi cap means when you are investing across large cap, mid cap and small cap. Right? And the large cap are supposedly the top 100 stocks which are listed in an exchange. Mid cap having 5,000 crore to 20,000 crores and small cap below that. So it's a well diversified portfolio. Parag Parikh Flexi Cap Fund, since inception, that is since I think 2012 or 13, they have been able to grow capital at the rate of more than 20%. Precisely, I don't remember. More than 20%. Your fixed deposit gives you how much? 7-8%. Recurring deposit around that much only. Suppose something is promised 3 times ahead. Is it not a good one? Do you want to be part of that? You know, there is this person name is Rajesh, I think. If you search, you will find Thakkar, Rajesh Thakkar or somebody who is a fund manager. Please go through their profile. How does a fund manager function? What are the knowledge skills they have? Where do they gather knowledge? Please understand, managing a fund house of 80,000 crore, your own capital through SIP, is a huge challenge. This is one area in finance which is highly paid. Because here is an opportunity that can be backed with knowledge. Apart from that, you have to do a certification from NISM, right? And that National Institute of Securities Market. A certificate is required. So if you do that, you are able to have an opportunity in the mutual fund sector. Secondly, we have something called portfolio management services. Okay. Now, why this is growing now? You heard about HNIs, high net worth individuals, H, N and I. Those who have crores of money, 100 crores, 1,000 crores, they do not know where to invest. What normally people do, when you have lot of money, either you put in business or you buy land. Traditionally people believe that land is an appreciating asset. And if you have a good business, then you put in business. But seldom you know that putting money in a finished accommodation, I mean some apartment, all of that, does not fetch you more than 7-8%
CAGR in the long run. But if you buy a land, obviously 15% CAGR. Somebody promises a 20%, Parak Pari is higher more than that. Is gold investment good? What's your take on that? Investing in gold is good one? Yes or no?
Yes, sir.
Okay.
Sir, gold bond is good, but not gold ornament.
Okay, not gold ornament, but gold bond. Okay. Who is now issuing gold bond? What are the mechanism of investing in gold? Okay. One thing is called buying buying the physical gold in terms of jewelry. What other things you can buy? Because some people are buying gold. Yes. Suppose you want to buy a lot of gold investment because you know the market is, the prices are going up. Anybody would like to do that. What are the methods of doing it? Then one thing is called you go on 24 karat gold bar you buy, gold coin you buy, right? Is it a good thing to buy that way? What are the other avenues of buying it? You heard about something called ETF, Exchange Traded Fund, gold ETF. Something like the way you buy State Bank of India share, you can buy gold ETF of different companies are giving, right? You can also buy something called fund of fund. You can buy schemes of mutual fund which are putting their investment in gold ETF, fund of fund. So these mutual funds are not buying gold, they are putting their money in buying ETFs, exchange traded fund. And probably one of the best method of buying was sovereign gold bond that the government of India has discontinued. You are aware about it? You are not aware? Sovereign gold bond was one of the best one. No, 2015 or 16, this government had introduced. You'll be surprised to know, over last 10 years, it has given 280% return. 280% return. Sovereign gold bond. Right? But the limiting factor is called you have to hold for 8 years. So longevity is more. But the beauty of that, after 8 years, when it is redeemed, there is no capital gains on that. So suppose you have purchased 10 grams at 40,000 around 2018-19. So 8 years is 2027. That 40,000 has grown to 1 lakh. 2.5 times. So that when the 1 lakh comes to your account, you don't pay any capital gains on that. And top of that, every year the bank pays you 2.5% interest also. That is taxable. On the whole run, the CAGR is more than 17%. What is the CAGR on Nifty or the Sensex? Suppose you have been investing your money only in index funds, Nifty and Sensex. What has been your return in the last 20-30 years? How much Nifty has grown in the last 20-30 years? CAGR. So you understand CAGR now? Compounded annual growth rate. Okay. What exactly will be that? Something? A wild guess? More than fixed deposit? No. More than fixed deposit. Correct. So fixed deposit is 7%. So how much that around? Can you imagine it is only 13 to 14%. Had you been putting money in only Nifty funds, index funds, 13-14%. How much gold has given return? Bearing this last 3 years of rally. Bearing the last 3 years of rally, how much gold has given in the long run? Last 40 years CAGR? Around about 10%. Around about 10%. So people who believe that put money in gold only, unless there is a consumption value to that, it does not give you higher amount of return. Now please understand, we are discussing the broad topic called career prospects in finance. Why I am trying to tell you all of this? Your career is finance is backed with knowledge. So unless you build your domain knowledge around it, you are not able to face your potential client and convince them. The HNIs, people who invest in thousands of crores, you basically do portfolio management services, right? Now here I am reminded of Sabir Bhatia. No, Sabir Bhatia, ex-founder of Hotmail. He's also in news for his comments, whatever comments he's doing. I think one decade ago, again in this interaction, somebody asked him in the audience, some management graduate. Now you have a lot of experience in startups. According to you, what are the three important qualities of a management graduate to shine? What is the success mantra? We asked for success. He said three things. It has been very, very close to me last 10 years. I think I would like to share with you. If you accept, it's good. Reject is also good. The first thing says focus. Goal is clear. What I want to be in life. Focus should be very, very crystal clear. Second is called domain knowledge. Adequate domain knowledge. And third is called overall personality. And overall personality is a mix of how you move around along with communication. That sums up how a management graduate is supposedly to become successful. Because many times the outside world is very disruptive and there are a lot of distractions. This word disruptive has come from this Jio, Reliance Jio. They have popularized the word disruptive marketing. You heard this word disruptive marketing? How does Reliance Jio gather so much momentum in terms of subscriber base? They came few years ago. What they did? They said, okay, you can buy a SIM free. Everything is free. So we are addicted to free. Even when there is 20% discount, we go. Free means that everybody will go. So everybody had a Reliance Jio SIM. We heavily used the data, got addicted to data, and on the same side, Reliance Jio started gobbling up the competitors. I think excluding Airtel, there is no one else. It's almost a duopoly. If you come to economics, pure economics, there are different kinds of market, right? I am reminded now of, you heard about Warren Buffett? Rakesh Jhunjhunwala? So Rakesh Jhunjhunwala is Indian model, Warren Buffett is a global model. Where you are able to build wealth. And Warren Buffett says that when you invest in equity market, wherever it is, do not have a 3-year, 4-year vision of buying some stock. If you got a vision that I am buying a business, not a share, you will have wealth creation, right? Okay. Why I am reminded of Warren Buffett is called, is one or two quotations are very, very close to me. I know it's very difficult to practice, but it's there actually. Okay, before I said that, SEBI data in the last 3 months ago, this says 95% of retail investors have lost money in trading in the first 95 days of 95% capital also. Which means, suppose you have put 100 rupee. So 95 rupee is gone for 95% people over here in the first 95 days. Which means stock market is a asymmetrical payoff. Now I am coming to derivative. I know you may not be exposed to derivative. If you get time, please read my own book, which is the prescribed book in derivative by Excel books. Financial derivative by Excel publications. Now financial derivatives are tools of managing risk. I will give you a simple example, very layman example. Don't have to go any technical in that. Suppose you want to book a car, advance book a car, right? Now you ask why you like advance book a car, because you feel that, let's say that XUV 700, whatever model it is going to become expensive in the next 6 months. And I don't require a car now, I require after 6 months. So what are the options I have? Either I defer my payment by 6 months, or I fix my price today to be purchased after 6 months. So either I can take a risk, whatever is the price after 6 months I'll pay. Or I can say, let me fix the price today. I'll make the payment only after 6 months. And therefore the instrument we use is called options. Right? Call options. Call options are right to buy. Call option is an instrument contract under derivative. Option is a contract. Call option is a type of option And call option is the right to buy at a particular price within a specified time. Now imagine a scenario. Now the price of the car is 20 lakhs. Currently, today, right? And you want to buy after 6 months, right? You apprehend that after 6 months the price may become 25 lakhs. Perception only, right? It may change. So what you do, you say, okay, I'll pay you 60,000 advance or 1 lakh advance, fix my price at today's to 20 lakhs. The deal is not today's price. I'll fix around 21 lakhs because I also know after 6 months it become expensive. So you set a deal, not 25, not 20, but 21. So what you do, you pay 20,000, 30,000, whatever is the advance money you pay. Now what can happen after 6 months? Either the price is more than 21 lakh or less than 21 lakh because somehow Mahindra did not do well, the model is a failure, whatever it is. Let's say the price is 18 lakhs after 6 months. What you will do? You will still buy at 21 lakhs.
Yes, sir.
You will buy 21 lakhs, so you will make a loss of 3 lakhs. No, just imagine it. You are the person. You set a deal that I have paid 20,000 advance. Of buying at how much? 21 lakh after 6 months. After 6 months, the model is a utter failure and the price has reduced to 18 lakhs now. The dealer is very happy that I have set a good price of 21 lakh. What is your take on that? Will you buy that? What you will do in that? You will not buy. But do you have an option of not buying? Because you had a contract with him, no? Now there's a difference. Had you entered into a future contract, future contracts are obligatory. You have to do it. But suppose you enter into an option contract. The word option means right to buy, not compulsory to buy. Right? So what you will lose? The 20,000 advance you lose. You are happy with that. Instead of losing 3 lakhs, I lost 20,000. That is the beauty of derivatives. Derivatives are instrument of risk management. They are not instruments of profit maximization. For example, you know there is a subject called operation research. OR. There is a topic called linear programming also. Maybe you are aware of it. And whenever you start solving linear programming, the question is either cost minimization or profit maximization. Objective. Objective function is called either you minimize cost or you maximize profit. So derivatives are instruments of minimizing loss, not maximizing profits. So wherever you have an uncertainty in future, you are able to take the help of derivatives. So this is a market, this is a sector, is highly paid nowadays. So every investment bank has a treasury wing. They manage funds because see, if a foreign bank trade in multiple currencies, they have to manage their currency in terms of hedging the currency. The word hedging means minimizing risk. No, the word hedging has come. See, whenever you do gardening, no, you leave it open. Let the cattle come and graze and go away. No, you fence it, no. That fencing is called hedging. So when you take a position in the forex market, forex means foreign exchange. Suppose you want to buy a dollar or whatever it is, right? You want to take a risk position in that. Derivatives come in here. So this slide tells you these are the different areas. Banking, all of you are aware. I think you are aware more than me. What are the opportunities in banking? But the problem in banking, please understand, I am not discouraging you, right? No, banking reforms in India started sometime in 1991 when you had this Narasimhan committee. That's one committee formed by the government of India called Narasimhan committee. And Person Narasimhan was, I think, he was the finance secretary in 1991 around.
Yes.
Correct, no? Finance. So there are a lot of recommendations from Narasimhan committee. If you go through the recommendations, 2-3 recommendations, the government is working very hard on that. One of the most important recommendations is that Narasimhan committee says that take out banks from the clutch of you, make it liberalized, open market, let the interest rate be deregularized. Do not fix. Before 1991, the government was fixing the rate of interest. Now what does the government do? Only the repo rate is fixed. See, if the government is going to fix your advance rate, deposit rate, then we don't need so many banks. When as well go to only State Bank of India, then why does IDFC banks exist? So that is the deregulation. Second thing, Narasimhan Committee says that progressively you need only 4 or 5 banks. We don't need 100 banks. And you will realize there are a lot of mergers in banking. First merger was the associate banks of SBI got merged in SBI. Now a lot of public sector banks are merging, private sector also. Why? Because the banks are getting digitalized. So from the brick and mortar model, we are moving to click and mortar. Just on a click, you get a financial inclusion as part of digital banking. Now the most important recommendation from Narasimhan Committee, obviously 1997 we had a committee by Khan Committee. M.Y. Khan, if you read the book Financial Management, there is a book by Khan and Jain. You put in Google also, you find Khan and Jain is the most popular book in financial management. This M.Y. Khan was a then professor in Delhi University. So he was heading a committee in 1997 and that committee recommended that the bank should become universal bank, not scheduled commercial bank. Like suppose you go to Esplanade Mall. What do you do there? You watch a movie, you have your food, you buy some things. All your entertainment needs are getting fulfilled, apart from buying needs. So universal banks are those, when you enter, let's say HDFC Bank, you want to open a demat account, it is there. You want to open an insurance, HDFC Life is there. Any kind of financial need is satisfied by a universal bank. Please understand, banking is slowly becoming specialized and strategic. No longer banking will remain as an operational. People, I think this is in a common balance. Early 2000, the PO job, probationary officer job, was almost equated to IAS officer. You were a PO means it was a big thing in the town. Now this fellow is a PO. Now POs are running in thousands now. Please understand 20 years ahead. Unless you build up your domain knowledge of specialized services, PO will cease to exist. The routine jobs are getting over. Why I am trying to hint? Please come down to specialized jobs. Equity analyst, portfolio management services, risk management, derivatives. These are the upcoming jobs where the job potential is backed by knowledge, backed by skills, not merely by doing, there is a word called SOP. During COVID, we got popularized with the word SOP. It's called Standard Operating Procedure. Very good. I don't want to demean the management graduates, but please understand, if I were to ask you, what is the hallmark of a management student? What makes the MBA separate from the other branch of learning? What is so special in it? After you pass your MBA, what additional skills or what is your USP basically? Unique selling proposition. MBA graduate as such. What could be the USP of an MBA graduate? What are the MBAs doing and therefore they are paid highly? Let me give a statistic to that. Yes? Administrative. Okay, let me give a statistic to you, some knowledge. Last 10 years of placement record in the IIMs. Why I am referring IIM? Because we are fixated that IIMs are a benchmark. There is no other intention of putting it. So last 10 years of IIM record says that the top 3 sectors where the highest paid jobs go. Give a guess into that. 3 sectors, top 3 sectors. This sector number 1, 2, 3. Which are the companies, industry sector, which pay highest to the IIM graduates or management graduates? Yes? JP Morgan. Company. No, sector or industry. Finance. Investment. IT. It's a mix of all your responses. You'll be surprised to know. Not surprised, it's a common knowledge in the consultancy. First question. Consultancy is highest paid in IIMs and all management top mark B schemes, followed by investment banking and followed by advertising. Advertising. That is the distinction. That is the particular reason. What does a consultant do? Consultants are basically problem solvers. I am trying to put in layman language. I could be also very flowery in terms of making it complicated. I don't want to do that. They are basically problem solvers. You got a problem? You go to them, pay them money, they'll solve it. Or they'll advise you. Investment banking are those we discussed all now. Equity analyst, portfolio management services, all mix of that only. And third is called advertising. Very surprisingly. Now, why advertising should be highly paid? These are a consecutive. You read a book by the name Right Brain Manager. If you get a time, no, read the book. Right Brain Manager. Psychologically, biologically we have left brain, right brain. We all know that. Psychologically also we have a left brain and a right brain. What is the specialty of the left brain? The left brain is more logical, methodical, scientific, systematic, algorithm-wise, start and end. The right brain is more creative. And a perfect management graduate is supposed to be a mix of both. If you say, no, I only like mathematics, I only like to work in individual, you are not fit to be a management graduate. You are supposed to work in a team. You cannot be like a science graduate. So, no, I am going to build up my career as a scientist. Give me a lab, my instrument, my experiment, I will make invention, not that way. You have to work in teams. So the mix of both, and therefore, if you look at all the advertisements, they are a magic of imagination and creativity. Most of the advertising that you see in the broadcasting media are all creative elements. So therefore, these three are there. There are so many slides. I just, in 10 minutes, in 10 minutes.
Sir,
Yes,
sir, so, you said that the universal
bank.
universal banks, that is different from the localization?
Yes, this is all. Same banks got a universal status. State Bank of India is now termed as universal bank because their activity is no longer routine jobs. They have different subsidiary that makes it upgraded to universal bank. They don't have to put a tag that SBI is universal bank or HDFC is universal bank. Since they provide, like for example, when you enter a cafeteria, you got everything, no? You can ask, order and eat. HDFC, ICICI, SBI. These are the top-notch banks which are working as a universal bank. It's a concept popularized in 1997 onwards, 20 years ago, 30 years ago, right? So this is the new trend. So routine banking jobs are on the slide down there. I'll just end by telling you on equity part. I just want to get your knowledge in 10 minutes something. You are aware about Nifty and Sensex? All of you? Okay, very good. Nifty is 24,000 around. Who decided 24,000? Why that is 24,000? Why not 78,000? Have you questioned why Nifty should be 24,000? Why not 2,400? What is the basis of Nifty and Sensex? Who decides that? You know what is Nifty, but what is the pricing? How do you know? Just because somebody told you in the class, also professor tells you this is what are all this is. Question. I'm not saying be rebellious. Rebellious and inquisitive are different things. Not be rebellious, be inquisitive. Nifty is a combination of 50 stocks. Aware? The 50 are supposing the top 50, but top 50 keep on changing every 3 months. Here. Nifty is an index. If you go mathematically, there is something called index composition. I'm going now technical because many, Sensex also 30 stocks. It is crossing 80,000. Why 80,000? Why not 2 lakhs? Are you getting my question or not? Have you questioned yourself? Or just accept it? Very simple it is. Nifty started trading this 50 stocks 1995. First time 50 stocks that put under a basket in 1995. So top 50 in 1995, whatever is the market capitalization, the word is called market capital. How do you know market capitalization? Is nothing but number of shares outstanding is the closing price. Number of shares outstanding into closing price is market cap, flexi cap, that cap only, market cap. Top 50 stocks 1995, you add up all the market cap, let's say, that is called 1000 crores, presumption, correct? 1995 top 50, adding all is 1000 crore. That 1000 crore was indexed to 1050 points. So that 1000 crores of 1995 has grown to 24,000, which means that last 30 years, top 50 stocks have grown 24 times. That's all it is, nothing else it is. Why I am trying to tell you that finance needs lot of in-depth knowledge. You cannot afford to be superficial. Other branches of knowledge, without mentioning anything, they can blabber around, flowery words, some branding here and there, convince them and get it over. In finance, to open your mouth only, technicals are required. Okay, very soon, very soon. So this is what it is. And basically, to be an equity analyst, in next 5-7 minutes, right? There are two schools of thoughts, basically. One is called fundamental analysis, one is called technical analysis. Two things are there. Why I am trying to hint over here? This is where a lot of the career opportunities there. If you become equity analyst, you can get into banks, you can get into treasury, you can get into mutual funds, you can become a fund manager, a lot of things are there over here. Fundamental analysis. If you are good in reading books of account, profit and loss statement, income, cash flow is required. You have to have a knowledge of reading the books of account. And technical analysis is looking at the charts, which most of you who are trading must be doing, I am aware. Those who are doing trading, if you are not looking at charts and investing, what are you doing? You are not doing investment, you are basically gambling. Investment is backed with knowledge and technique. Gambling is just luck, right? So, two things, two websites please follow. There is one website by the name screener.in. Screener. SCREENER. Screener.in. And that screener.in gives you a fundamental snapshot of a company, which you cannot get from the books of account as a chartered accountant or an auditor. You can get screenshot there only in terms of what is the EPS, PE, everything you will get financing. Second is called trading view, that all of you must be using for looking at the support, resistance, trend line, Bollinger Band, all that. So you need to be mastery on fundamental and technical to qualify as an equity analyst, backed with certificate 15 of NISM. There is a certificate, you can search in Google, certificate 15 of NISM. NISM is National Institute of Security Market. National Institute of Security Market. Why I am saying these are stepping stones for you to build up a career in finance. Apart from the traditional banking that you get through in a bank, you okay. Now, to end by telling the answer to what I was asked you, what is the USP of a management graduate? What distinguishes you? You said administrative. Any other answer? What distinguishes all of you from other branches of learning? What is so special in management graduates? Seemingly, other branches of knowledge have a lot of jealousy with the MBAs. Oh, this MBAs, they have no technical know-how. Suppose you want to do MSc Physics, you have to study BSc Physics honors. Then only qualified to become MSc Physics. Management, everyone comes. All branches come. From engineering to BCom to BA to arts to science, Sanskrit, everybody comes. Okay, you are welcoming.
Decision-making skills.
Very good.
The decision-making skills is USP of the management.
Absolutely. Well said. That exactly is what it is. A management graduate is supposed to master the agile decision-making ability backed with accountability. You cannot take a decision and run away from it. Your decision has to be backed with knowledge, accountability. This is where equity analyst, portfolio management services, mutual funds come handy. I cannot talk too much. This is where I would like to rest my talk. If you got any things to ask, you can as well ask me. Thank you all for the interaction. I'm happy that you interacted. If you had it in monologue, but it's very boring for you and me also. There are no questions, right? We'll end the session.
Very few questions.
Sure. I'm very happy.
So when should we buy call option or put option?
Oh, you're asking technical. When you will buy call option, put option. You want a general answer or technical? General answer.
Similar.
Anybody would like to just give a thought to that? When you want to buy a call option or put option? Okay. Let me define what's the call option first. Then you will only answer it. Call option is basically option right to buy. Right to buy means you want to buy at a lesser price. It means you want to fix at a lesser price. The answer is whenever you are bullish on the trend. Whenever you are bullish that the market is good, market is index or stock, whatever it is. When the trend is supposedly bullish, according to your perception, it is better to buy a call option at a strike price below the market price and wait for the rally to get over, buy at the exercise price and sell at the market price. For example, suppose the market price is 100 rupees, right? You search for a call option having a strike price, strike price, exercise price, 99, pay 2 rupee premium, whatever it is. So net cost is 101. You wait when the market is around 105, 107, whatever the resistance of the stock or the index, sell it up, get a profit. So when the market is bullish, call option. Obviously the reverse, when the market is bearish, when you take a short position is equated to taking position in put option. So put option is the right to sell. But beyond this, there are something called that, okay, I'll end over here if you don't have a question. There's a subject that is evolving called financial engineering. You must be aware. What's the basic profile of an engineer? What does an engineer do? Any engineer? Technical. Give me keywords. What does an engineer do? Engineers basically design, whether bridges or software. That's the synonym. Engineers equal to design. Financial engineering is a branch of knowledge where as a financial engineer you customize highly profitable portfolio for the HNIs. You get paid in lakhs and crores. For that you need to know, can I combine 3 call option with 2 put option and make the option strategy. We no longer talk about single option and single put options. It is a new knowledge. Any other? Yes.
Sir, you termed as flexicap. Flexicap is the combination of small cap, big cap, and large cap. What is the multi-cap and the flexicap differences?
Very good. Yes, sir. Very good. This flexi cap was previously known as multi-cap. SEBI had removed the word multi-cap. Now the same thing as flexi cap. Flexi cap, the only problem is called around 60% has to be large cap. It is not 33, 33 and 33. Majority has to be large cap and the minority shared in the mid cap and small cap. You can open and see Parak Parik flexi cap. I think they are around 50-60% in large cap only. And the beauty of Parak Parik, I'm not trying to popularize something, it just came to mind only. This is one mutual fund that has exposure in US stock. Suppose you want to buy Meta or Google or Tesla. Can you buy over here? You have to have a demat link to the US stocks. Parak Parik gives you the flexibility because they invest in top 5 US stocks. So when you are investing there, you are as well buying the top 5 also, proportional. Less number of mutual fund schemes have that option. Get through? Okay. Thank you.
Thank you so much, sir, for such wonderful and informative session. Indeed, the session was so filled with information and you went to the depth of the topic to make our students understand by suggesting suitable examples and shared experiences, which is of course different than the bookish knowledge. Our students must have gotten ideas related to the delivered topic and must have known the variant dimensions of finance and financial inclusions and implications. Hope they will utilize and implement those in the academic and professional endeavors. We are absolutely privileged and honored, sir, for listening you deliver and letting our students know about the career prospects in the financial sector with special reference to Indian financial markets. Thank you so much, sir, once again for this engaging session. Thank you all for being so cooperative and making this seminar a huge success. Thank you so much.